Hello and welcome to another Smaulgld live stream. It is the 13th of February 2019, and tonight's topic, we're going to talk about China again, but this time China's gold purchase in January. Now China had, or the People's Bank of China had purchased gold from 2009 through the October 2016 period, or at least that's when they had reported adding gold to reserves. They stopped reporting adding gold to reserves in October 2016 and just began adding back gold to reserves in December of 2018. And we're going to explain the People's Bank of China's overall foreign reserve position and their gold position, as well as their U.S. Treasury holdings later on in the show. First, let's get to the immediate issues in the markets today. Today was a relatively big market early in the day for equities. Equity markets did a bit of fading, but the Dow did manage to finish up 117 points today. That's to 25,543. That's up 0.5%. NASDAQ was pretty much flat at 74.20, and the S&P did manage to gain about 0.3% to 27.53. Now, over at the gold prices, gold and silver also did not do very well today. Essentially because the equity markets really shot out of the chute pretty early and pretty aggressively higher. But gold today down a little bit, went down $4.24, down 0.32%. It had been up a little earlier in the day. In the morning, it had gotten as high as $1,317. It is now at $13.07, pretty much where it closed. By the way, the dollar index soared today. It went up to 97.16. So that's another reason that gold fell. And they had the inflation numbers today. They said that they were the lowest increase in, I think, 16 to 18 months. So you would think that that's probably good for gold in a way, in meaning that it doesn't put any pressure on the Fed to raise rates. But then also, if you're concerned about inflation and you think gold is an inflationary hedge, and they're telling us we don't have to worry about inflation, that's probably what weighed on gold price today, if you're looking to rationalize these prices, which sometimes you can't. But there's one explanation. Now, silver went down a little more. As we say, when gold goes down, generally silver goes down a little bit more, and when gold goes up, unless gold is going up for a long period of time, then silver doesn't really catch up to gold until there's a sustained bull market in gold, and today was typical silver price action. Gold was down less than 0.5%, but silver was down nearly 1%, down 0.82%, down 13 cents, and down to about 15.57. Currently, it's at 15.55. And what did that do to the unsustainable gold-silver ratio? There are people that are still, they have their mindset that the gold-silver ratio is unsustainable, should be 16 to 1, 15 to 1, 9 to 1. I'm going to go through this each and every night because sometimes there are people who are listening for the first time and may have forgotten. Those ratios are no longer, in my opinion, valid. First of all, relative rarity doesn't necessarily dictate price or value. We use the example of platinum. Platinum pulls out of the ground at 10 times less than gold. It is not priced 10 times higher than gold. Put that aside. Sometimes relative rarity is important, is dispositive, or at least somewhat correlative. And the reason the 16 to 1, 15 to 1 excuse me, gold-silver ratio held for a while was because, first of all, the United States set it at 15 to 1 based on relative rarity, and then changed it to 16 to 1, and that's because both metals served as money. And I mean money in the real sense of the word, that not only was gold and silver granted status as money by law, but also traded as money, as currency, and fit all the characteristics of money. When gold and silver stopped circulating as money, were demonetized by governments, then the demand profile of gold and silver were no longer connected. Gold and silver have different demand profiles currently. As we're going to see, with the Chinese gold purchases. Gold demand is distinctly different than silver demand. Almost 40-50% of gold demand is for investment, and that comes in the form of individual investments and also central bank investment. Silver's investment demand is only 10 to 15%. Silver has no monetary value whatsoever. It does not trade as a currency, and it is not held by a central bank. So not only does it have a lower investment profile or demand as a percentage of overall demand, it has no monetary demand, where at least there's some central bank demand for gold. The number one use for silver is industrial. The number one use for gold is jewelry. So again, you're not comparing apples to apples. Yes, when they were both gold and silver were money, you had silver in the currency, meaning in the dimes, quarters, half dollars, and dollar coins, and you had silver certificates, and then you had gold coins, and then you had gold certificates, and then you had the gold standard. Well, you can argue that it made sense for those to trade at 16 to 1. Once you remove both metals out of the monetary system, and gold remains somewhat in the monetary system because central banks own it, the demand profiles have shifted dramatically. And that's why you don't have this 16 to 1, 15 to 1. Just saying that they come out of the ground at this ratio, so it is outrageous and it is extreme and it is unsustainable that the gold-silver ratio is so high. It should be 9 to 1 because that's the percent. That's how the way it comes out of the ground, and that's the ratio. That's just ranting. So what? And the other example is my paintings are rarer than Picasso's. So what? The fact that right now they mine only 9 times the amount of silver to gold is largely irrelevant. It's how much of it is in demand and what is the demand for. And you can see here, and it's not just me saying this, the last 10 years, 20 years, 30 years, 40 years, 50 years since they finally demonetized gold in 1971 and allowed the gold price to float past the $35 an ounce that it was set at in 1934 by the Gold Act of 1934, setting the price of gold at $35, and then allowing gold to float as a metal that you can use for monetary purposes, you can use for jewelry, you could use for whatever you want. Silver, the same thing. That's when the ratio broke down and headed higher. And since 1971, the ratio has never been 16 to 1 except for about 15 minutes in 1980. And the lowest it got after that was about 30 to 1 in 2011. Otherwise, the gold-silver ratio has averaged well above 50 to 1. So the idea that it's unsustainable, just look at it since 2011. Other than the few instances, the 2 instances really, since 1974, where silver spiked, the gold-silver ratio hasn't been anywhere near 16 to 1. So just keep that in mind. There's people who are convinced that silver is set to skyrocket because this ratio is unsustainable. It would be unsustainable if there was some type of legal mandate that both gold and silver were used as money and that the ratio was 16 to 1 or 15 to 1. That doesn't exist. All right, what else we got in the gold? And people interpret that as me being against silver. No, I'm against the idea that somehow this ratio is unsustainable and that people try to sell gold and silver. They try to sell silver on the basis that the gold-silver ratio is, quote, out of whack and it's unsustainable. It clearly is sustainable and has been sustainable. And I've shown you the long-term charts. It's not like it's been 16 to 1, 9 to 1, 15 to 1 in anyone's lifetime. I don't know who's listening to this show. All right, now here's an interesting gem out today from the World Gold Council. This is actually kind of stunning. The official coin market saw its second highest level of annual demand on record. That's huge, reaching 236 tons in 2018. Now that's still less than the jewelry demand, but that's still a very large amount. But look where it flourished. Iran, South Africa, as stock market volatility and geopolitical uncertainty prevailed. Now, if you look compared to the U.S. Mint, which is the retail demand in the United States, the Gold Eagle and the Gold Buffalo sales are really, really low. So this clearly is a non-U.S. Physical gold market. Now, there are gold inflows into the gold ETFs, and one could argue that Westerners, Americans, buy gold in the form of ETFs, and that's probably the case. When you hear Sam Zell and all these people say we're buying gold, well, they're buying probably GLD or some other ETF. They're probably not stacking coins or bars or buying physical gold and storing it in the Swiss Alps. But interesting that the world is buying gold, and we are seeing the whole central banks are buying gold. They are in small amounts, but it's still a significant concept, and it draws back to our gold-silver ratio. They are not buying silver. Doesn't matter how much gold or how much silver, they're not buying any silver. And that's a very key point, showing that even though the amounts that central banks have been buying to date, and they're saying it's the most in 50 years, we saw the charts the other day, it's still less than half of other gold demand, like this coin demand. It's like a quarter of this coin demand. No, actually, it's not. Let me get the charts out for that. The point is that I'll pull up the charts in a second, is that the central bank gold demand is not driving overall demand. It's not that significant in the grand scheme of things, but it's significant in that central banks, almost all of them, own gold and about half a dozen or so are adding gold, which shows that the concept of gold as a monetary asset is still alive. That's a very important point. It doesn't matter that they're not buying tremendous amounts. They're not buying hand over fist, as some people are saying. And I'll show you that chart for a second. Let me show you the amounts that they bought last year. Here it is. You can see here, you're talking about, I think it was 550 to 600 tons of gold bought by central banks. Now, the mining last year was like 3,600 tons. So it's not like central banks are buying up and scooping up all the available gold. But the fact that you have India and Hungary, Kazakhstan, Russia, which is the main purchaser, Turkey, then maybe Mongolia and Poland buying, that's relatively significant, and the People's Bank of China. They're not buying a lot, but the fact that every bank on here, they all have some type of gold holdings. Even if they sold, there's a couple that sold, they still have gold. None of them list silver as a financial monetary asset on their balance sheet. And this is only some of them. We don't have on here the United States. We don't have on here Belgium. We don't have a lot of countries that own gold that are significant holders of gold. We don't have Italy on here. We don't have France on here. All big gold holders. You don't have the IMF. The IMF doesn't have silver, but the IMF has gold. ECB has gold. We don't list that on here either. All right. What else happened in the gold market today? Let's see what else we got. Now, we mentioned Italy. There's been some confusion over what's going on with Italy, and they've been talking about maybe they sell it, maybe they won't, but the Italian government came out today, so they're not going to sell any. But they want to make sure that everyone knows that that is their gold, that gold belongs to them, the 2,451 tons that we're going to take a look at later. So again, gold being considered important to a country's finance. It's not to overplay it, but it is important that you hear from time to time Venezuela selling its gold, Venezuela trying to get its gold back from England. You don't hear this about silver. And again, it's not a cut on silver. It's factual that gold is the monetary asset. We see it in the news with respect to governments being concerned about it. You don't see that concern with respect to silver. All right. Now, the other day, we talked about two mergers. We talked about the Barracks merger with Randgold, and then the even bigger merger between Newmont Mining and Goldcorp. Now, in the Newmont Mining Goldcorp merger, we discussed that they had announced that they were looking to get synergies out of their merger, meaning they were going to shed some of the non-profitable or less profitable gold mines and focus on look like getting their cost per ounce down by combining the best of both of the two large companies, Newmont number 2, Goldcorp number 4, and really focusing on eliminating also overhead in, I mean, they must have thousands of employees that are duplicative now. If they mine in the same jurisdictions, they've got accountants, lawyers, they could probably get some cost savings there. But the idea was the merger wasn't intended to increase production. It was intended to increase efficiencies. Now, Barrick said today that they're looking to increase their output after the Randgold deal. So this is a deal, two different types of deal. The Barrick deal is accretive to, it looks like, or they're projecting it to be, mining production, whereas the Newmont and the other one are, Newmont and Goldcorp are not necessarily, and their projections don't show any mega increase in gold production. They look like they're trying to increase profitability and then shed off some of the other underperforming assets. So we'll keep an eye on that. All right, and that's it on the gold and silver. Let's take a look what happened in the crypto markets today. Bitcoin pretty much flat, down 0.30% today, down just basically flat, down to 35.83. Ethereum at 122, that's up 1%. Bitcoin Cash at 122, that's flat. They've been both tracking each other recently, the same price. And Litecoin at 41.75, that's down 4.43%. And now, speaking of crypto, this is an interesting, people have different reactions to this. A lot of crypto firms, crypto exchanges often experience hacks and they lose the coins, and then people say, see, Bitcoin or Litecoin or whatever it is an insecure asset. And that's not really true. I mean, when a bank gets robbed, that doesn't mean that cash is an insecure asset. Well, it is, because it can be stolen. And cryptos can be stolen just as easily. And the security around cryptos is often very much lacking on these exchanges. And sometimes there's probably insider fraud where they say they get hacked, or they hack themselves and then they say, oh, look, we don't have it anymore. But for whatever the reason, it can be easily stolen because it's in digital form. But cash also, you can go into a bank and you can rob a bank. I'm not saying you can, but one can. I'm not advising anyone to go rob a bank. But that doesn't make the cash, the underlying specie, less secure. And there have been a lot of stories about how exchanges are the poorly run ones, there you go, are generally ones that keep too much of their cryptocurrencies in hot wallets online and available for people to trade. The more secure ones will keep their bulk of their digital assets offline in what's called cold storage and only leave a small percentage of their assets online for people to trade. Now, the other thing about the crypto assets is people can take control and not leave their cryptocurrencies on the exchanges. And the exchanges, the prudent ones, tell you don't leave anything more on an exchange other than what you want to be able to trade on a day-to-day basis. So if you buy cryptocurrencies online on an exchange, they advise you not to keep them in a hot wallet on your phone or on your computer, but to transfer them to some type of offline cold storage and then store them away, and then they can't be hacked, because if the private keys are not available, not online, unless somebody can find where you keep them, then they're as safe as cash. So if you hide cash in a safe deposit box, or you put your private key information in separate deposit boxes, then there's no way anyone can get at those cryptocurrencies. So people try to say that the Bitcoin is insecure. It's not the Bitcoin that's insecure. It's not the blockchain that gets hacked. It's the place where the Bitcoin is residing on the exchange. And I think it's a point, as someone was mentioning today in a conversation on Twitter, well, that means that Bitcoin is doomed because no one will be able to trust it. And I don't know. It is similar to a bank getting robbed and say, well, I guess we can't trust cash anymore because it can be robbed. What it does highlight is that it is, in a sense, a bearer instrument, in that if someone takes your cash or your Bitcoin or your gold or silver, you really can't track it down and get it back, because it's fungible. Remember, that's what money is. It's fungible, and those are the risks you have with money. And I don't know the details behind this Canadian crypto firm, but there it is. All right. Now, do we have any Moronica today? Actually, we somewhat do. And, well, first let's go to the quick news here. There's the Republican and Democratic Senate Intel Committee said there was no direct proof of conspiracy between Trump campaign and Russia. And I guess now they have to wait to see if Mueller issues any type of report, if he issues, whether it goes public, and whether there's any type of collusion put in there. Now, with this actually is Moronica. We're gonna have to play the song. Here we go. Uh-oh, we got a moron here.
Presenting the distinguished international news commentator and foreign correspondent,
Smaulgld. This has been an extraordinary week in world affairs.
No, I told Hillary Clinton that that's moronic.
Yeah, I haven't covered this very much, and I don't intend to, but this new Green Deal came out. I looked at it, and I kind of scoffed at it because it didn't even seem worth the time, because it was a combination of, what's it, beyond bold initiatives that would seem relatively impossible to achieve, and they included things like rebuilding all the houses in the U.S. and making them green-friendly, eliminating all fossil fuels, and powering everything by wind turbine and solar energy, eliminating air travel, setting up high-speed rails, and then also providing universal basic income for people who cannot work or are unwilling to work. Now, the reason it's moronic is, first of all, universal basic income, and those that has nothing to do with global warming, climate change, or anything to do with a green initiative. That's just thrown in there. Now, you can be in favor of certain legislation, depending on what side of the debate you're on. If you are interested in reducing global warming or slowing down carbon emissions, there are clearly things that can be done that range from carbon taxes, reductions, Paris Accord. There's a whole bunch of stuff that can be done. But universal basic income has nothing to do with that. So in a sense, it's moronic, because it's almost like you're asking people to sign on to not just an initiative, the green initiative, but to a concept which has never been tried on a national scale. And it wouldn't make sense to try something like that on a national scale in a country so large. It's been tried in a few areas, and the only place where it even remotely could make sense is in a place where a country has a tremendous amount of natural resources that arguably don't really belong to any one person or company, that the resources technically belong to the people of that country. And while a company may get the rights to drill or whatever it is, and actually you wouldn't have this under the new Green Deal, because you wouldn't be drilling for oil. But assuming that you have some type of natural resource, I guess you could say the wind belongs to everybody, or the sun belongs to everybody, that a portion of the profits from what the private company pulls out of the ground, you could argue belongs to the people, and you can give the people, there's a source of income that you can somewhat justify belongs to the people under universal basic income. But universal basic income, just based on the fact that you live in a country and there's people that are making money and there's people that are not making money, and therefore, well, we have to fix that, so we're just going to make sure you get a certain amount of money, you don't have to worry about anything. That's an entirely different economic regime, an entirely different political regime, and has nothing to do with Green Deal. Now, the problem with the Green New Deal is it includes universal basic income, but also it includes it goes beyond any type of incrementalism. Any type of plan to work, you have to consider, I'm not saying baby steps, but you have to consider unintended consequences. In this, it's obvious what the consequences would be. It would be economic disaster. It just basically upend the entire economy, and just flip it over and everything has to work a different way. And it's moronic to think that you can even approach it this way. Now, what's more moronic is not only you have a Green Deal and then you have universal basic income is that I think 6 or 7 of the Democrats that have announced they're running for president signed on to this. So yeah, we were for this. Now, they didn't say they're for legislation that will reduce global warming or that will reduce carbon emissions, or when they said they were for this, they basically said we're for universal basic income and this eliminate all fossil fuels in 10 years, eliminate cows, go vegan, no planes, refit every house in the United States. That's what they signed up for. They did not qualify that they're for legislation or carbon taxes or some testing of universal basic income. They basically agree that this, and if you read the new Green Deal, it's moronic. If you agree, if you what you're trying to do is say, I think we have to do something, that's fine. But to say we have to do this, that is moronic. Now, Mitch McConnell is calling them out on this. He's going to have everyone in the Senate vote on it. And I think if you vote for this in its current form, because it is, if you read it in its current form, is moronic. It doesn't mean that there can't be sensible legislation that people can argue or debate over. But this particular, whatever it is, the new Green Deal, I'm sorry, it's moronic. It doesn't make a stitch of sense. It doesn't explain what the economic impact would be. There's no study behind it. There's no explaining how over the next 10 years this happens. Doesn't explain where the money for the universal basic income comes from. And in fact, they took down the frequently asked questions. So how can anyone say, yeah, I'm in favor of that new Green Deal and I'm going to run for president on the basis of it? And what's moronic more about it is that all these senators have at their disposal, and they've been in the Senate for a long time, they've got access to research, they can have staff come up with their own plans. No, they sign up for a plan publicly from a first-term congressperson who, I'm sorry, doesn't seem to understand basic economics. She understands platitudes, and she's so basically admitted that sometimes that it's more important to get the gist of the emotion than it is to understand to get all the facts straight. And that's a paraphrase of what she said. And for a senior senator, many senior senators, Kamala Harris, Cory Booker, Elizabeth Warren, Bernie Sanders, all signing on to this. Now, I don't know. I think that's the cart leading the horse there. If they want to be bold, they should promote and put forward their own legislation rather than saying, yeah, we sign on to the Green New Deal. It'll be very interesting to see how many of them actually vote for it. Now, it's not legislation and it's not binding and it's not going anywhere. But to see how many people vote for it, there's one thing to be for it directionally, maybe. It's quite another thing to say, yeah, I'm for the Green New Deal, because it means you're for it in its current form. And I'm sorry, it is moronic. Now, let's move on to China and gold. Now, as I mentioned, there's another common misconception constantly with China. The China pumpers, or the gold pumpers that love to talk about China, are always saying that, Sun Tzu and China is hiding its gold and they're appearing not to have gold, and gold is the most important thing, and Chinese are smart because they like gold, and they're going to shock everybody with how much gold they have. No. When the People's Bank of China reports its gold, that's all it is. It's the People's Bank of China. Again, this is another story that's taken on a life of its own. So first of all, let's go to India. We know India imports 900 tons this year. Last year, maybe 800 tons of gold a year. And we know that the Reserve Bank of India reports 580 tons of gold on their balance sheet. No one says India's lying, India's got more gold. Of course they do. There's no dispute that India has been importing, not just the last 20 years, hundreds of tons of gold a year, but that historically Indians have clamored for gold, and that there's temples with like 4,000 tons of gold in them. There's estimates that the Indian citizens have 15, 20, 25,000 tons. There's no denying there's a lot of gold in India. But it's not at the Reserve Bank of India. Why? Because the Reserve Bank of India is largely, if you remember the way they view things, they're trying to move to a cashless society. They're trying to move into, they recalled the rupees a couple of years ago. They don't want the people using gold as a medium of exchange. That's not going to stop them because half the country is unbanked, and that's what they use in a lot of rural areas to preserve their wealth. They buy high carat jewelry, gold jewelry, 22, 24 carat jewelry. They give it as gifts. But it doesn't mean the Reserve Bank of India is lying when it says it has 580 tons. But somehow you go over to China, and there's this whole cottage industry of talking about and trying to guess how much gold China has and why they're lying about how much they have. I don't think they're lying at all. And this is up there with there's no gold at Fort Knox. It's a meme that's been created that China good, China has a lot of gold, they're smart, Sun Tzu, U.S. bad, U.S. has no gold at Fort Knox. Neither of those stories are true. But let's look at what the People's Bank of China reports that they have on their balance sheet. And I'll go through why we know there's more gold in China, just like we know there's more gold in India. It's just not at the People's Bank of China. And this ties into the People's Bank of China is just one place in China where it's their central bank and it's how they run their monetary policy. It doesn't require them to have 20,000 tons of gold on their balance sheet. There's no purpose in that. It wouldn't make sense. But here you see 1,054 tons in 2009 and 2015. And then they didn't report for a while. Now, it's true, China, and this is one of the reasons why the yuan is not an international currency besides capital controls and massive debt, but there's also a lack of transparency. They didn't report their gold reserves from 2015 from 2009 to 2015. And then, boom, they reported about 600 tons of gold. And that's when the whole, they're lying, they've got more than that, conflating the People's Bank of China with the entire country of China. This is just the amount that the People's Bank of China has on its balance sheet. It's not saying this is how much gold is in China, is owned by China, is owned by the Chinese government. When this came out in 2015, I wrote an article for Zero Hedge, and I explained that yes, there's a lot more gold. There's no secret. We know they mine 400 or 500 tons of gold a year. We know that they import hundreds of tons of gold a year. We know, just based on those numbers, if you add them up, sure, there's 10, 15,000 tons worth of gold that have poured into or been mined in China in the last 20 years. And it hasn't ended up on the People's Bank of China. Well, then where is it? Well, there's trading on the Shanghai Gold Exchange. There's other banks in China that own gold. There's rich individuals that own gold. There's sovereign wealth funds that own gold. It's just not all at the People's Bank of China. And here you see it went to 1658. And then a lot of people were saying, well, they had to add that gold to get into the SDR. Well, not really. I mean, they should have been in the SDR, given that they're the second largest economy in the world. If you needed gold to get into the SDR, the British pound is in the SDR and only has 310 tons of gold. So China had enough gold on its balance sheet for whatever reason, and I think it has sufficient amounts for the reasons that a central bank would have gold. Now, it's only about 2 or 3% of overall reserves, but China's fairly liquid. And again, remember, China's a communist country, so whatever gold is in all the other state-owned banks, well, China owns it anyway. So it doesn't have to be at the People's Bank of China. This is just where they keep a certain amount of it, and they stopped adding it around October 2016. And that coincidentally was the month that they joined the SDR, and then they stopped adding it. A lot of people say, oh, they were adding it, they're just not reporting it. Well, okay, if you believe that, then there's no reason to trust the Chinese yuan as an international currency. I actually don't believe that. I believe they report exactly how much they have. Why wouldn't they? It's no kind of big secret that there's gold in China, and they just don't have to have it at the People's Bank of China. And so at the end of, and you'll see, they stopped adding gold around the time where they were also really reducing their foreign reserves. They sold off 1 trillion foreign reserves during that time period. But in December of 2018, they added about 10 tons, and then they added another 10 tons, as you can see, in January 2019. Again, the significance of this is, remember, China is a big gold consumer. Just because the People's Bank of China isn't the big gold consumer doesn't negate that a lot of gold is mined, consumed, imported into China. The reason I like to look at the People's Bank of China's gold reserves is not to gauge Chinese gold demand, because it clearly isn't a reflection of Chinese gold demand, is to highlight that it is still considered a financial asset that the People's Bank of China is adding. And they added it again. And because it looks like they're starting to increase the reserves again, their foreign reserves, well, why wouldn't they add gold? They mine it, they have it, and you can see. They see that period right there, 2015 all the way down? Well, they were selling off reserves. So why would they be adding gold to reserves? So when people have this gold-centric view, they think that all they're going to do is add gold. They're never going to stop buying gold. Gold, gold, gold. They wake up in the morning, they look for the gold shop. No. They add gold when it makes sense to add it. See, to somebody who is gold-centric or has gold derangement syndrome, they think every day is a day to buy gold. I guarantee you that's not how they think about it. They're managing a much more complex set of issues when managing their economy than just thinking all we have to do is buy a lot of gold and that's going to solve all of our problems. That's not how a centrally planned economy thinks. That's not even how a rational person who looks at an economy thinks. And also, here, let me show you this one here. Chinese gold mining production. From 2000 to 2017, they mined 5,600 tons. We know that they don't let that gold out of the country. So how come they're not 5,600 tons on the People's Bank of China's balance sheet? Well, because it doesn't have to be there. It's clearly in the country. It's clearly owned by the government. In fact, even if it's owned by individuals, technically in a communist society, the government owns it. They're just letting you hold on to it. And we know that they imported, here, I'll show you this other chart here I did. From 2001 to 2017, China imported just from Hong Kong 9,100 tons. Plus the mining 5,200 tons. Well, there's 14,000 tons right there. But it's not at the People's Bank of China. They're lying. No. It's elsewhere in the country at other banks. There's subsidiary banks, central state-owned banks, sovereign wealth funds, rich individuals, party members, maybe Shanghai. They import even more gold. So yes, there's no debate in my mind, just like in India, that there's at least 20,000 tons of gold. But that doesn't change the entire economic equation as some people think. Oh, then they're going to roll out 20,000 tons of gold into a stadium. It's going to be game over. Why? 20,000 tons of gold in the country at current prices is worth $803 billion. A couple of months worth of QE. It's nothing. Even if they revalue it, or the price goes up to 4,000, it's 4.47 trillion. We saw the other night, China has like 40 trillion in outstanding liabilities. Even at 13K a ton, 13K an ounce, which would be pretty much a stretch, it's only worth $8 trillion, all that gold. So the idea is People's Bank of China is adding gold because it is a monetary asset. But it's not going to change their debt profile. It's not going to change anything. It's just a prudent thing to do. And it's not going to change gold demand either, because 10 to 12 tons a month, 100 and 200 tons a year is not going to really dent the gold demand. But again, it's significant. I'm not downplaying it. I'm trying to put it into perspective. Here's another chart showing you, if you take all of China's gold, not the gold that the People's Bank of China actually has on its balance sheet, those that small amount that they have, the what was it? It was the 1,864 tons. That's worth about $85 billion. That's worth nothing. I mean, they have reserves over $3 trillion. But my point about even if you take all the gold, not just the 1,800 tons, but the 20,000 tons, it's worth $803 billion. And even if you up the price to ridiculous $13,000 an ounce, it's still only worth $8 trillion. This total debt was 2 years ago, and it was $28 trillion. Well, that debt is now $43 trillion. So the gold isn't going to save them. It doesn't mean they're smart and Sun Tzu and they're hiding their gold and then they're going to roll it out and it's going to be game over and the United States is going to be crushed in the dollar. That's all complete nonsense. You've seen the dollar has done far better than the yuan. And that doesn't mean the U.S. doesn't have a debt problem. But this idea that somehow gold is going to save China and they're smart and it's going to crush the dollar, it's not. Now let's go over and look at the treasury holdings of China. This is another myth. China's going to crush the dollar. They're going to sell all their treasuries. Well, not really. I mean, they manage their treasury positions, and they did sell off some of them. You could see the little dip there when they had they were selling off more reserves to support the yuan. And then you could see Chinese holding U.S. treasuries 2016, 2018. They still have 1.1 trillion as of last November. And this is even with the trade war and the threats of sanctions. It doesn't make any sense for China to sell their U.S. hold. What are they going to do with the money? What are they going to move it into instead? They're not going to put it in the yuan. I mean, they could add it to euro, but that's not a better job. I mean, the euro right now, the European Central Bank is still doing QE and still has zero interest rates. So why would you put it there when the treasuries at least pay a rate of interest? Well, they can buy gold with it. You know, that's... Anyway, this rather than speculate, just look at this chart. China is not dumping treasuries. They're holding on to their treasuries. They may not be adding in any significant pace, but it's very hard to get to de-dollarize. And also, you only want to de-dollarize if it helps you. And a lot of people thinking that somehow China de-dollarizing is going to help them. No, it probably hurt them. All their state-owned banks lend money denominated in dollars. China issued an $800 billion dollar-denominated note, I think sometime last year, reported. No one wanted to report on that, but that's what they did. They have $2 trillion of outstanding foreign debt denominated in dollars as well, I believe. And I think we got one more chart. Yeah, let's look at the gold reserves. Now, where does this put China? Latest gold edition. What's important to note in this chart is only China and Russia, and now lately India a little bit, are adding gold. The United States hasn't added any that we know of. Germany sells 3 or 4 tons a year. IMF, none. Italy, they talk about it, but they're not adding any. They're talking about selling it. Now they're saying they're not selling it. France, holding on. Russia's really moved up a lot. Record amount of gold added to reserves last year, 272 tons. China, 10 tons last year, 10 tons this month, about to January to 1864. Switzerland sold more than half their gold back when they joined the IMF in 2000, I think. They used to have 2,000 plus tons. Japan hasn't added any. Netherlands hasn't added any. Some of these countries repatriate gold, like Belgium, Netherlands. They don't add any. India hasn't added gold to reserves in 9 years, but added some at the end of last year. I'll have to check their site and see if they're adding any more. But clearly shows, no matter what Bernanke says, it's a little more than holding it for tradition, because if they were holding for tradition, they would be selling it off in bits and pieces and ending that tradition. The significance of central banks are buying gold is not the amounts they're buying, is that they're still buying it and they're still holding on to it. They're still listing it as an asset. And again, that ties back to your gold-silver ratio. Silver is not being held by any of these central banks. All right, well, that's the state of play. Let's go take a look at the comments that we've accumulated during that time period. Let's see what we got. All right. We got 30 people watching. So, all right, let's see. That's the top chat. Live chat. All right. You know, I might have trouble on the air there. Okay, here we go. Ann is here. Mint Mark is here. Pablo is here. Jack likes the intro music. Well, thank you. That's another original composition created exclusively for Smaulgld by Mark Battaglia. We're up to about 7 or 8 intro songs that he's created. They're very... I look forward to playing them before getting on here with the Smaulgld mug stackers. Let's see. Pablo saying the bright side, DXY went high 97 and gold above 1300. Well, it is interesting. I think it's time to once again bring out the comparisons of gold and other currencies, because gold versus the dollar is strong, and that's why you're not getting much of an increase in gold, but against the Australian dollar, Canadian dollar, other currencies, gold's doing very well. Yeah, there you go. Pablo says 80. It's $80 Canadian dollars shy of an all-time high in Canadian dollars. That's right. And it's talking about the yellow vest, American super tramp. If China is buying, then so am I. Yeah, that's what a lot of people think. China is smart. Sun Tzu says. All right, what else do we got here? Got lots of stuff here. Bitcoin ATMs. We covered that the other day. People are talking about their investment strategies. Pablo Pina. AOC is leading the revolution to have every building with solar panels, all green energy, and removing percentage of cows that are up to no good. Poor cows, the Hindus will be upset. Well, that's the other thing that I didn't mention. Remember, the United States population is what? 15% of the world? I mean, it's not... Even if the United States somehow led the world and managed this massive undertaking without any displacement of... I mean, you want universal basic income, you're going to have to pay for it. And if this plan actually creates less wealth, then how are you going to pay for it? But assuming you can do it. If the rest of the world doesn't do it, it's not going to have much of an impact on the greenhouse gases. I mean, the carbon emissions, it's... Unless you get everyone else to do it, no one's going to lead by example. If the United States is economically damaged by doing it, you don't think China's going to say, oh, that's a good idea. Why don't we do it too? Yeah, I'm not sure it was well thought out. What else do we got here? Max Kaiser is all I need to know. What did he say here? Yeah, I don't know. You know, Max makes some good points. I don't want to take away from... In fact, a lot of people make a lot of good points. Even people that overall I may be critical of or critical of some of their core narratives. But still, you do get something out of listening to most of these people, I think. I like to listen to a variety of different ideas. All right. Well, I think that's it, unless my stream has died. No, that's it. All right. I want to thank everyone for joining me tonight. And remember, we do this each and every evening around 7 to 8 o'clock. We start a little late tonight. We started around 8 o'clock tonight. Well, we do this 7 days a week, and we cover gold, silver, cryptocurrencies, and economics. So thanks for joining me tonight, and we will see you tomorrow. And don't forget to support Smaulgld by either sending a one-time donation by check or sending items of value to the P.O. Box 714, Dover, New Hampshire, 03820, or becoming a Smaulgld patron, or making a one-time donation on PayPal, or donating via Bitcoin or Litecoin. All the information is on your screen on this BitChute and YouTube, and also on the Smaulgld.com website. Also, you consider if you're going to buy precious metals, Smaulgld has affiliate arrangements with SD Bullion, Money Metals Exchange, and Golden Eagle Coin, and the links are all there. And if you do buy, it's not investment advice to buy gold or silver. Plenty of things you can buy there. You can browse their inventory. You can compare pricing and shipping at all 3 of those online bullion dealers. And if you do buy, Smaulgld gets a small commission. I do have to disclose that, but it does help the site out. And you pay no more, no less than if you visited those sites directly. And I do want to thank people. I've been recently lots of purchases through the Smaulgld links, particularly through SD Bullion. People have been happy with their purchases there. So if you are going to buy through SD Bullion, please consider supporting Smaulgld by clicking on the links below or on the Smaulgld website. Thank you very much.